Okay, quick Thursday morning radar update to check what date it is again. So, yesterday the DAX was that healthy sideways action. Small caps just drifted through the lunch session, closed strong. 250 just went sideways. FTSE 100 went down. Where are the stocks we do business in? Well, they're usually in this area. What are these to us? Well, this one here is not much use to anyone really, the FTSE 100. The DAX, well, that's an interesting one. The leader of Europe. From the DAX, we always go over to the transports and we apply a little bit of old school Dow theory and we go, what is the transports doing? Well, the transports is an inside day off all-time highs. We don't argue with that. There's talk of softness in stocks. I think yesterday was just one of those, it's like a summer's day, wasn't it? With just wide spreads, nothing really trading. On a widespread day, especially when the sun's out, you're better off just walking away from the screens because that's all it is. And let's be honest, most of the stocks I trade have wide spreads on a good day. So on a widespread day, you can literally just blow them and they'll move around a bit. And there was a lot of what we call phantom closes, just random closing, uncrossing prints. And then, you'll see something up 6% on the closing print and you come back in the morning, it will look like it's down 6%. But really nothing has happened. So, Dow, just going sideways. It's still inside this day here. It's right near highs. US market, a little bit of digestion in the riskier end of the market, hasn't been. So the S&P traded a new all-time high yesterday, but the Nasdaq just digesting. The Nasdaq does this in bull markets. If you've been in the markets over a decade, you'll have seen this action many times. And the Russell, same, just normal action, basing out there. Looks pretty good. Famous last words, don't quote me on that. So we'll move on from that. I'll jump straight into the volume leaders. I'll have a quick look what's moving today. It is 10 o'clock. We should have traded 23% to be on average volume, 35% to be on conviction. 23%. Still quiet, but not bad. A few REITs in there. I'll just fly through these. This one's a bit of an outlier. It's been moving for a long time. We talked about that one last night. Henry Boot. Tick up. We've noticed a few of the construction stocks. In fact, there's a few of them in today. Have been doing well. Obviously, I'm in one. Not one of the ones I can see on this list, though. I think it's in the small caps. Right side of a potential base there, if you like that kind of thing. They're a little bit sloth-like in action. They don't move on, aggressive trending moves. So for that reason, I like the smaller, less liquid, higher beta ones. But, right side of a base, kind of. Let's zoom in and see if we can say, right, so no, this one's a little bit more Darvisy in its action. But just normal action. I have a position in this, obviously. OXIG, right side of a potential base. A lot of stocks basing out. VLX, last setup we had on that was, a kind of wide and loose swing points. So, it's basing out again. So, my advice for anyone, and it's probably a good reason to turn off any kind of investing sort of sites or whatever. And this sounds bullheaded, what I'm going to say here, but you can watch Homes Under the Hammer now. You Cash in the Attic, all the classic programs on the telly. You will learn more about investing on that kind than any news feed related to shares and trading. It's going to be better for your psychology. On days like this, you will see all the reasons why this thing's, all these people are getting, but it's like, it's Chinese whispers, whatever you want to call it. And the story's changed, back up. Oh, this back up. You're not going to get anything in that sort of reasoning. Every time someone says something like this, I say, how are you going to trade that? And if you put that above your computer screen, how are you going to trade that? Because if it's whatever it is, I trade my own plan. It doesn't matter what anyone's opinion is. Before I buy a trade, the risk management's in place. It's a paper cut. What's the worst possible thing could happen to me? A paper cut plus slippage. Yeah, but if you'd have read that news and you'd done this and you'd plattered this spaghetti and you'd look for this needle in this haystack, you'd have known that. Hang on a minute. I've got thousands of stocks to trade. I'm going to be wrong between 40 and 60% of the time on average. How am I going to trade that? You've got to be able to manage these things, and at the end of the day, you will see a lot of noise about stocks what are just doing very normal action. You've got to put the blinkers on. There is nothing in my methodology that I need to check anyone's opinion on, is what I'm trying to say, and there shouldn't be anyone else's. People like to say, it's the old bullet. I've never been on a bulletin board, so if you need to go on a bulletin board and someone's got an opinion what proves to be right about your stock, a bearish opinion, they'll say, see the bearish side. Well, I'll just say, see my risk management. It's there. I have no clue what the future is untold. Whether you're right or wrong, that's about 50%. Well, picking stocks by the best in the world, in history, is around 50% as well. So at the end of the day, I just stick to my sort of bull-headed approach. I know what makes money. It's actually the math behind it, picking and sticking with the trend, the growth trends, the price trends. I don't actually need to look at a chart to do what I do. It makes it easier and quicker though. So back off the soapbox. We missed Soapbox Wednesday because I was outside in the sun, so that's we've just brought that one forward. But there is truth to that. If you need to go on a bulletin board to find something about your stock, what might affect your methodology, well, you probably haven't got a methodology. You need a methodology what's profitable no matter what anyone's opinion is. And if you haven't got there yet, well, there's a little bit more work to do. Get your investing to the stage where you don't need any more noise. So I will just update on that noise here, and I will tell you that this stock was I don't know whether it was over here somewhere. It was in a newspaper or something, so I'm told. Someone dropped it on the day saying Kainos is a sell. They posted it in the paper. Bob's Top Tips or whatever it is tells you to sell Kainos, and it has a bad day, but it just trades like normal. Well, it didn't even really move that much. Maybe it was here this day, I don't know. But my methodology says Kainos is in an uptrend, I'm trading towards what I trade towards in the numbers. I trail my risk management behind me, and this is what makes the money. So the newspaper tip, whether it's right or wrong, is going to be right about half the time. My risk management is, my stock picking being right is going to be right about half the time. But if I zone out all that noise, my right might be, at the moment, being right is 10 times bigger than being wrong on closed positions. It was something insanely big on including the open positions. It's hundreds of times that, the gain to pain ratio. So that is what makes the money. The hardest thing in the world is to stick with the trend. The reason is everyone's an expert and everyone's telling you why you should sell it, and everyone's valuing things, discounting all the right-handed edge, Value might tell you to sell this, but the right-hand edge came out with, something different and said, hang on a minute, your value does not know the future. And every time the growth goes up, the value, is on the teeter-totter. It's on the other side of the seesaw. So just buzz through these last ones. Soapbox day. And into the small caps. So that's 10 minutes of me rattling on. We should have traded 25%, I'll put in the small caps. Mining, oil and gas being the main, and financials being the main ones in play here. These alternative energy stocks, they're still moving, basically. They've been going for a long time. They're trading up on the story rather than the... I have no numbers on that one either. Banks, financials... EKF, there's another one, so many opinions when it was just doing very normal stuff here. It got, all these stocks had a little bit of a COVID boost. They got hit by noise. What happened to the trend? Nothing, nothing wrong with that trend. Now, I will also say that, I took this trade off because I had 8, 9 positions in stocks what would get, it could, on the back of the COVID trend, and I rotated into add points and into some new stocks as well. I actually took this one off. So there you go, operator error from me. But we also had a swing point on it and potential to put back on. I did it with there's some sectors as well, gambling sectors. It's not my favourite sector. Could have traded 6 of them, traded a couple, peeled back on one. I don't want to be loaded in that sort of sector really. But it's been a market where we've had the luxury of so many. Griffin looks pretty good as well, doesn't it? So many stocks to look at. It's been a bit of a luxury. Same. The story. Oh, this, oh that. That's normal action, especially in a mining stock where they tend to have twice the volatility. So we'll probably see that on the swing screens later. I won't curse it. It's got to make the screen first. Zephyr Energy, obviously I sold that one. It's an area where I rotate. TRX. This is not something what would hit my screen. It's a purely technical play. It wouldn't hit the growth screen. But yeah, one thing to note, go and have a look at stocks what have actual growth, and then go and look at a basket of stocks what really are trading towards good growth, and then look at a basket of stocks what aren't, and are, you know, the basket what don't have those forward growth numbers. I mean, this one's ticking down in its turnover. Yeah, its earnings per share is kind of, it's gone from a minus 0.6 to minus 0.1 in the forecast numbers. So, you know, it's going in the right direction, but you know, the growth isn't posted yet. So look at a basket like that, and you'll see that the basket of stocks what doesn't have growth will tend to sort of, you know, the majority will do normal pullbacks, where the basket of stocks what do have growth, you know, it will be a little bit more positive, sideways, and some will be popping higher. You know, you look at EKF, ECK, you'll get a different result across the basket, and probably if you waited in the growth stocks, you know, you'd have had a new all-time high this week like we did. Making up for not doing a radar yesterday, but you know, always from my opinion, I trade growth stocks. Majority, you know, I wait in growth stocks, trade anything. I'm just gonna, this way education, yes, it's a little bit of a boring one. The numbers are still ticking up. They're very thin numbers, 0.5 to 1.5. It's gone a fair old way out of the low risk entries we note. So it's still trending. There's nothing wrong with that. Would I add up there? No. When I say up there, I retract that statement. I don't view the market as having gravity. I just view it as the growth is turning up or it's turning down. Okay, so a pretty positive day so far. We'll see how we go into the zombie hours and through to the US Open. Markets are closed tomorrow and Monday, so this is, you know, will we get a bit of a rip next week? And that is the door. Okay, I'll leave it there.